So, if billions of dollars were wiped out in the residential real estate market, in the economy, what would trillions do in the commercial real estate market? Being a much bigger market with values that are much more than the residential market. You know, real estate that is tied to risky loans from tied with the banks and seeing a lot of the regional banks going under. What would that do in terms of the economy and in terms of the power of your own currency as well? Now, it got me thinking that if trillions of dollars, or even a percent of that, let's say, were to be wiped out, because we have trillions of dollars coming due in commercial real estate by the end of 2025. Even if you just get a percent of that being wiped out, putting it in the billions and more than the 2008 crash in terms of the real estate value, what would that look like in terms of saving the economy, in terms of printing money? What would that do to the value of your currency, the cash that you hold? What would that do to prices, inflation, and so on? If you all remember, I'm pretty sure you do, during COVID, a lot of money was printed. Trillions of dollars were printed during COVID to safeguard the economy, to save the stock market. And what happened after that? Couple of weeks or months after, the stock market did a full V-shaped recovery. Real estate rallied. Real estate, in some areas did 100% return within a year or so. Property values doubled. Asset prices went up. Bitcoin went up. Gold went up. All the asset prices out there skyrocketed because of the amount of money printing that the Federal Reserve and a lot of central banks around the world did. And also the amount of money that was pumped not only from the central bank and from a monetary side of things, but even from a fiscal side of things. When you look at the government, a lot of money and stimulus checks were basically pumped and given to every citizen out there. So this next crash that is expected to come, if it comes, but this next crash that is expected to come, the trillions of dollars that are in commercial real estate, even if you get a percent or two or whatever, to completely be wiped out, and you get the same action from the central banks using the tools that they always utilize to bring the economy back up, especially if there's massive job losses, that would bring in, aka the rates being cut, and the money printer go burr. Now, during COVID, approximately $7-8 trillion were pumped into the economy, into the markets. That basically caused the asset prices to go up. In this next crash, how much money will be printed? That's going to be a very key question. And if that money is being printed in the trillions of dollars again, and if it ends up being more than what was printed during COVID, especially if there's going to be massive losses in the stock market, in the real economy, and so on, you're going to expect that we're probably going to see more than $7-8 trillion of printing of money to pile back in to the economy. It could be 10 trillion, it could be maybe more than that, maybe double of that. It all depends. But that's very important to note for what is to come. Because if that crazy amount of money printing that's going to eventually come, if there is a big black swan event and a big massive crash and the commercial real estate basically goes under, causes a trickle effect in the banking sector, the regional banks, the big banks, causes massive layoffs and so on. They do rate cuts, but the economy is still plunging and it's not enough. And then it starts the money printer to come in and they inject trillions of dollars like they done before. That just brings back the whole euphoria into the gold market, the stock market, Bitcoin, and etc., etc. Now, time will tell when and if that comes. But there's one thing for sure that I can guarantee you, that when that money printer goes burr, is you don't want to be holding cash at all. And this is how the rich gets richer and the poor continues to get poorer. The biggest risk to your finances is not investing. I know we talk a lot about here on this channel that, the risks of the economy, the risks of, the markets and whatnot, and what's there, and we talk about the job losses that are happening in certain industries like tech and the shipping industries and so on. How, we're seeing the markets, get riled up, making all-time highs. But let's not forget about the bigger picture in all of this. 10, 20, 30, 40 years down the road. Let's not forget the bigger picture, that the money that you work for, that you go to your job for, right? Whether you're working part-time, full-time, whatever the case may be, the money you're earning, the cash, whether you're a business owner, whether you have a shop, whether, you are an entrepreneur or what have you, the cash you are getting into your business and then netting the profits, or the cash or the salary that you're getting from your job, is depreciating in value every single damn year. And when the crisis, every time a damn crisis comes, or a recession happens, or a crash happens, and you don't really have much assets, or you just have mostly cash, it gets worse off, especially the amount that they're printing, especially when they print way more than in history, like they did during COVID. As you probably saw already, real estate, stocks, everything went through the roof, and cash became weaker and weaker, the value of it, the power of it. As you can see, inflation has gone up, prices of goods and services have gone up, right? You want to look at, let's say, college tuition today versus 20, 30 years back, much more higher. You want to look at goods and services. You just take, let's say, for example, a fruit like an apple, or certain groceries that you typically buy today versus 20 years back. It's been all going up. Housing, shelter costs, rent, etc., all going up. And they will continue to go up as the central bank out there continue to pump trillions and trillions and trillions of dollars. And that's where you get this huge disconnect. And I feel the inequality, the wealth inequality that's out there, I feel the gap is going to get worse off in the next crash. The more severe the crash, the more severe the money printing is going to be, and the more severe the power of the dollar, the power of your currency, is just going to depreciate even further and further. That meaning, if you're holding just cash, it's going to leave you worse off. So what do people do to protect themselves, right? What can you do to protect yourself from the next massive money printing, right? It's not just the crash. Sure, the crash is something to be worried about. The erosion of value, the erosion of, the stock market losing trillions of dollars in paper losses, right? The erosion of also real estate and so on. This we all understand. We want to be careful with and protect ourselves. We can hedge against that through variety of tools and instruments. If you're looking at the stock market, you can look at options, puts, and what have you. You can utilize different strategies such as diversification and so on. These are all short-term strategies to hedge in case you want to protect yourself, especially in the short term. But medium long term, the biggest risk after all of that craziness that's happening in the market is that money printer that comes in. The printer go burr. The central banks going out there pumping crazy amount of liquidity and money into the system that just makes the money that you work for, in terms of your job, your salary, whether you're a business owner or what have you, that is becoming weaker and weaker. So the society has made such a crazy loop that You go to school, you learn how to get a job so that you can learn how to earn some money, so that you can get this cash and pay your bills, so that you can live life, eat food, have shelter, and then if you have a little bit of money, then you save it. But nobody tells you that this money that you go to, pay, you go to school and you pay school for, and that money that you're utilizing to pay your goods and services, your shelter, it's becoming weaker and weaker, although everything else is becoming more expensive and expensive. And while you go work at your job or you have a business or what have you, that money that you're earning, especially if it's stagnant, it's not growing at the inflation rate or above a certain level, that money that's coming in that you're earning is depreciating in value, making you worse off. And even though you think you're doing the right thing of saving money in your bank account, well, it's sitting there, it's actually losing value because the school system and society has not taught you about what to do with it. And the way to combat this money printing and erosion of value is simply through investing. It's very simple, right? And it may be whatever it may be. It could be real estate that you invest in. It could be gold. It could be Bitcoin. It could be the stock market and so on. Because the idea of investing in real estate is not to make 100% in 1 year, okay? Please get that out of your mind. Get COVID out of your mind. That is an anomaly, right? And that is one example where maybe someone will try to persuade you, maybe a realtor or what have you, tell you that, hey, COVID time's coming back again, we're going to make 100% and blah, blah, blah. Maybe if the central bank comes out and does crazy amount of money printing all over again. Maybe if COVID 2.0 comes over again, but that's an anomaly. Yes, asset prices are going to go up, but stop expecting that 100% gain in 1 year in real estate. Real estate, in fact, is actually supposed to be a hedge against inflation, and it's not supposed to be doing 100% a year. Some may argue, if you're a real estate investor, no, Daniel, you're wrong. You can actually manage it by, finding distressed properties, upping the value. You can do 50%. I'm not talking about that. I'm just talking about just general passive investing, keeping your money in a property, having it grow above the inflation level or keeping at inflation level, because the point is it's an inflation hedge. It works the same way as gold. Same thing with the stock market. So it's supposed to beat inflation, and it's supposed to actually do more than that to keep yourself growing in terms of your wealth. So that's why you hear the term the rich gets richer, the poor gets poorer, because the rich keeps their money into assets. They earn money and they buy land, properties, real estate, crypto, art, stocks, you name it, right? So the next crash, recession, when it happens, or if it happens, just think about long term what that's going to do with the value of the cash that's sitting there in your bank account. And people may be fearful and scared that, hey, this is not a good time to invest because things are dropped, or things have dropped 30-40%. But what you should be more scared of is that they're going to start the money printer. And then what that does to you in terms of the power of your money in 10 years time is it's going to leave you worse off. So that future college tuition is going to be more expensive. That future house, shelter, rent, food is going to be more expensive. So the way to keep up with that is move those savings, cash, into some asset, something you can invest in to grow with it, right? And while you're doing that, then yes, you can figure out ways how you can grow substantially. Try to make more than a measly 4% return or 5% or 7%. That you can do on another bucket of money if you have the risk tolerance to do so. This is not financial advice. I'm not giving any financial advice. Always talk to a registered investment advisor, financial advisor, when it comes to your investment decision. This is just my experience with investing, my knowledge of economics, and what I have seen over the years time and time again, just simple economic cycles that happen over and over again, that is so easy to see and so predictable, that continues to happen, that they just simply don't teach in school, right? They just simply don't tell you. Why? Because again, remember what I said, right? You're working, you go to school to work for X amount of dollars, to work at a job, to get cash, to get money that they are printing, that they're making unlimited supply of. And economics 101 tells you, when you look at supply and demand, when supply increases, the value falls. So how does that make sense? You're spending so much money to get an education, to get a job, to then get money that depreciates in value by quite a bit over the years, leaving you worse off. How does that make sense? I don't know. You tell me. Leave a comment below. Let me know what you guys think. Subscribe, hit the like button, bell icon to be notified on the next video, and I'll see you guys around. Cheers. Bye.